Hello guys, welcome back in today's video. From legislations to gains to, well, anything to deal with crypto news, we got it today. And there's three pieces of news that we're going to cover specifically. And if you haven't already, do drop a comment, subscribe, and click that bell and follow us for more updates. So right now we have what's good for crypto. So the FDIC said its record 472 billion was withdrawn by U.S. depositors. So it is a pretty big boost in price and the adoption is the latest report from the Fed. And they showed that the deposits in about half of $1 trillion were moved from U.S. banks during the first 3 months of 2023, which actually sent the stocks falling down. But it appeared that the revived concerns about the failures of Silicon Valley Bank, Signature Bank, and of course the First Republic were precipitated in some large parts of, well, by aggressive interest rate hikes and implemented by the Federal Reserve. But that 472 billion bank accounts that were pulled out. So the most recent quarter, of course, that's telling that they pulled out $472 billion. If you think about it, that is a lot of money to be just yanked from the banks. Well, the fourth consecutive quarter of the declining deposit totals, the quarter was drawn and since 1984. So none has been pulled out since 1984. So SVB Bank was a saver around 200 billion in assets. It was actually to the U.S.-based financial institutions provide services to crypto. Now, Signature Bank's Signet payment system enabled constant, instantaneous crypto-to-crypto currency transfers for business, and Signet is actually a big part of the functioning of some major exchanges, including Coinbase. So, some financial filings and other records prove that the First Republic's exposure to cryptocurrencies was actually negligible. So what happened when this, of course, stocks fell, of course, from this. So the FDIC saying that the main driver of this was the safety accounts in excess of over $250,000 levels guaranteed by the insurer. So, for example, what that means is when people actually diversified their holdings during the quarter, the total amount of insured deposits were held by the banks rose. So the S&P 500 dropped around 2.6%, and almost 2 weeks on track with the latest one-day percentage decrease since early May. And Comerica, KeyCorp, and Citizens Financial saw the actually most percentage drops. Now, Greenberg added that inflation and rising rates and economic pressure continues to pose threats to the industry, especially in areas like commercial real estate. So how is this actually going to help? Well, some of the removed money will be put in digital assets like Bitcoin, could actually enhance some demand for different currencies and actually increase the interest that may cause the value of cryptocurrencies to rise. And second, the diversification of the financial system fostered by the flow of funds into the cryptocurrencies actually reduces the need for central banks altogether, which is the main purpose of cryptocurrency, right? All right. An Apple WWDC event, which is an AI-linked crypto token render, actually got some good, well, some pretty good gains. ChatGPT in the mainstream, but crypto market projects have actually, well, gained pretty much investor trust based on token individual success and adoptions over time. Now, some of those top AI tokens that actually really, well, stood out like a sore thumb was like Render. So Render, the Singularity Net, Ajax, and Render token actually is speculating about the possibility of benefiting from the upcoming Apple World Developers Conference, the WWDC. So that's going to take place around June 5th, 2023 at around 1 p.m. Eastern Standard Time. Some of those product announcements are expected to be revealed, like Apple's VR headset, the augmented reality, and virtual reality product launch is actually linked to the potential rise in demand for the render token as well. Now, it differs from the GPU rendering on the blockchain, but it's similar to many other technologies in the the AR VR industry. So they could actually require huge volumes of graphics processing units, GPUs, which is where Render Network is speculated to actually placed well for adoption thanks to that distribution from blockchain. So there's actually from Render Token, the Machine Alpha, a Twitter account that actually promotes the Render Token said the AR VR industry is projected to be $1 trillion industry and will require massive amounts of GPU for AI and renders to scale this. Now all eyes on Apple WWDC in 2 days. Render will lead the crypto bull run. Not only that, but going back to some law, some new U.S. legislation could set out crypto pathway from security status to commodity, which is actually a great piece of news, right? So this new draft from the Republicans, the House Republicans in Congress, is actually looking for a way for digital tokens to be treated as being treated as security to a commodity as part of an effort to provide more flexibility and brighter guidance for digital assets within the country. Now, Patrick McHenry and House Agriculture Committee, G.T. Thompson, Republican of Pennsylvania, is the latest effort to illuminate the road around digital assets and still existing financial law while creating accommodations, unique aspect of the blockchain. Now, McHenry and Thompson actually are looking to draft the latest step in negotiations with House Democrats and Senate counterparts, and with the reception that will form with policymakers and the administration of President Biden remains to be seen, but will be key to future prospects of the legislation chances by the U.S. So what they're trying to do essentially is allow this to exactly be a comedy, but at the same time hold out for some of the Democrats as well. So when the Democrats are looking for more tax on this, that's what they want. So be careful with this one, and it's going to be a lot of work. Now, of course, remember it's just going to be a draft, but once we get some more ideas, it's really close to pay attention to the fine writing in this kind of draft and in the future. All right, guys, if you haven't already, subscribe, drop a comment, and I will see you guys again in the future. Thanks for watching.